we're much more focused on interest rates and the financing environment than we are worrying about the fundamental demand for aircraft leases that are rolling over in this market.
This is the Time on Wing podcast holiday edition. Welcome back. I'm Courtney Miller with Visual Approach Analytics. With me, Garrick Deschavon of Collateral Verifications.
That's me.
Garrick, who are our holiday guests today?
So we have the pleasure of having guests back.
They have the pleasure.
They have the pleasure of coming back on the show. That's very true. You're right. Absolutely. I mean, come on, it's so much fun to be on the show. So these are our first guests back, which I will make sure to let them know. And this is our last podcast for 2024. So, it's a first, first and the last. So it's great. It'll work out well. But so today we are going to chat with Mark Streeter and Jamie Baker, right? The rock stars of the aviation research industry. So Mark Streeter, currently Managing Director for High Grade, High Yield Credit Research at JP Morgan. Before that, he was VP Credit Research at Chase. He's also VP at JP Morgan. He's got a bachelor's from Boston College in Finance, Strategic Management, and MIS. And also an MBA from Columbia Business School. He's got a CFA. He holds CFA's Institute Certificate of ESG Investing. And in 2022, and I think 23 as well, they were ranked number one analyst in IG REITs, IG Transportation, and HY Transportation. And then for Jamie Baker, currently Managing Director for Airlines and Aircraft Leasing at JP Morgan. Before that, he did airline research at UBS Warburg, did airline research at Payne Webber. He worked at Continental, Micronesia, and Northwest Airlines for a while. He's got a BA in economics from Earlham College. And also in 2022, he was the first ever analyst to be inducted in the Institutional Investor Hall of Fame for coverage of airline stocks. And I'll just put this as a reminder out there that he was the drummer for Fountains of Wayne, by the way. So just, a little bit of, they're both cool to begin with, but
I'm going to cut everything down to that.
So Mark and Jamie, welcome back. This is your Time on Wing number 2.
Just a quick intermission before we continue with the show. We do get a lot of questions about how our listeners can support the show. And frankly, the easiest way is to continue the spirit of the show, which is just to reach out to us at conferences. But we also run businesses as well. And you can support us by supporting a lot of the work that we do. You can support the work that I do through Visual Approach by visiting visualapproach.io, where we produce a lot of research and analysis, a lot of data visualizations.
From my side, obviously, I focus more on the metals. So anything that's aircraft related, if you're looking for valuations, whether it's on aircraft engines, I'm happy to help with any of those types of projects. So we appreciate certainly the opportunities to work with all of you. And we certainly also appreciate just the fact that people are willing to listen to what we have to say and enjoy kind of our thoughts and takes on what we think is a fascinating industry. So thank you.
Okay, back to the show.
Jamie, Mark, thank you very much for being back on the show. I will say, so this is, Mark, I know you like these things. So you guys were the first to be back on the show. So Good job there.
I didn't tell you that. I would like to formally present my displeasure with telling you that you were the first repeat customer.
No. Well, and here is the thing. You guys are also the last podcast of the year for us. So we saved the best for last. So
does this mean
thank you for being back on.
Do we get like a frequent podcast status match or upgrade? Are we like Mosaic 2 now?
You have 2 punches on your card, and you were the only one with 2 punches on your card.
That's right.
Except for Garrick and I, we got a lot of punches.
We get a lot of punches. Yeah, that's right. When you get 5 punches, you get a free sub. So just. So in any case, no, this is great. Look, we love chatting with you guys. So thank you for making the time to chat with us today. And yeah, we've obviously gone through your backgrounds before, so we don't need to kind of bore people with that again. But we'd love to hear from you. I know you guys just came off of your kind of market update 2024. Like, what were some of the highlights? We'd love to hear from that. We can start with either you, Jamie, or Mark, whoever wants to start.
Sure. Look, I mean, 2024 played out as we thought it would, but with more intensity. So, 2024 leaned into the prevailing themes, the themes of discount airline impairment in North America, the themes of, loyalty, the themes of premiumization. It just leaned a lot more aggressively into those themes than what, I was initially thinking at the start of the year. On top of that, I think the other defining aspect of the narrative was domestic capacity relief. So if you think back to the July earnings season, all of the airlines that reported at that point guided to lower than anticipated third quarter results because there was too much domestic capacity at the peak. And I was actually sympathetic up to a point, because for those airlines that really can't produce annual profits, naturally you're going to sweat your assets and throw as much capacity at the peak season as possible. So I certainly understood why that capacity manifested. But July earnings season was disappointing, but it was also accompanied by assurances that domestic capacity would be reined in. And as that process manifested in forward schedules, that was really the catalyst that lit the stocks on fire, or at least certain stocks on fire, Delta and United in particular. So as we kind of begin turning an eye towards 2025, I see these same themes, though with the addition of lower fuel, knock on wood, all contributing to, help expand margins, at least for those airlines that have profits.
Yeah, so here we are back in talking about terms like capacity discipline, so how much, now this is different in the U.S. than it is in other parts of the world, but how much of this capacity discipline, it sounds like far more of it is due to the airlines actually being disciplined, as opposed to, let's call it, forced discipline from the OEMs.
Yeah. So longer term, I think the OEM situation deserves more credit for tempering CapEx plans at United, for example. In the near term, I think managements themselves deserve credit for the capacity relief. So it's really from the perspective of time, but I would not at all rule out the OEM situation as a significant contributing factor. So I think managements can take short-term credit. I think Boeing and Airbus, not that they would take credit from their perspective, but for my world, credit can be afforded to them. And then of course, you have the exogenous reality of, Spirit financial troubles and that bankruptcy and pulling down capacity by about a quarter next year. All of that factors into a surprisingly, in fact, when we think about domestic capacity growth in 2025, and we know this for a fact on the first quarter, but my prediction for the full year is that it will be one of the tightest years that we've seen really since before the financial crisis.
Yeah, we have this weird scenario where you have OEMs that can't produce fast enough, and yet in some way the airlines should be thanking them for keeping them from doing all the things that they would do with too many airplanes. It's this weird upside down situation.
Right. Well, and I think that's in part what helped unlock United equity this year, because the push, I had a buy rating for quite some time on United, and the pushback was, well, you've got this massive order book, you've got a huge CapEx burden, they're not going to generate cash, they're not going to be able to buy back equity. And fast forward to today, and they are generating cash, and they did implement a buyback, and CapEx has moderated.
What an impressive sacrifice and non-selfish move by Boeing to do that for United.
Yeah. I'm sure that's how they looked at it.
I would say,
Mark, what's your take on 24?
Yeah, so a couple of big themes, right, to talk about. Number one, so that we started the year knowing that, well, we didn't know exactly how the judge was going to rule with JetBlue's Spirit, but we knew JetBlue was going to walk away from the deal. And it was, you sort of look back and yes, hindsight's 2020, but listen, these were our calls and you can go back and read our research on this, but the market just didn't believe for a long time, especially the merger arb guys and so forth, what the potential fallout would be from either the judge rejecting the deal or JetBlue walking away. Now, it turns out that even if the judge didn't reject the deal, JetBlue had all these outs that people just had missed in the documentation and so forth. But we felt very comfortable that they were going to walk away and that there was significant downside in Spirit. So that was sort of, takeaway number one was market reluctance to embrace that. And on the flip side, the same reluctance to embrace Alaska Hawaiian, because there was a huge opportunity in the Hawaiian debt, which was incredibly cheap. And too many people lumped the Hawaiian situation into the Spirit situation. Now, again, we're never going to know this, but our view very strongly, more on my side because I had formal coverage, but Jamie informally without coverage, was that Hawaiian was not Spirit and that Hawaiian wasn't necessarily on a standalone basis as screwed, and that they might have been able to fix it if the Alaska deal didn't go through. But we felt very strongly that the Alaska deal would go through and there's going to be a great opportunity there. So that was kind of, an interesting trading opportunity and takeaway in my market. And we're talking about, these are not credit returns. These are equity-like returns that were available in some of these debt complexes and so forth, which is what sort of we live by, right? Because that's what we're really trying to highlight for investors that are playing across the capital structure. I think obviously it became well known early on in the year, the depths of the Vasu, nuclear bomb that went off on the corporate side.
Man, all this happened this year. I'm forgetting.
I know, yeah.
Wow.
There's a lot that happened in 24.
Right?
Elliot?
So hold on, we're not there yet, right? But we look back on our year in review here as we sit here on December 19th, right? The clearly the depth of the corporate impact from the Vasu, whatever we want to call it, situation and the recovery from that. But at the same time, right, investors really starting to embrace, and this was something we were too early on, because Jamie upgraded American stock in part because we spoke and I said, you know what, they're kind of out of the balance sheet sort of DEFCON 1 danger zone here. They are making enough progress that we can start to think about what the potential upside is in America. Now, it's still clouded by everything going on with Vasu and so forth. But, I think that's going to be a continuation of one of the stories in 2025 is that American continues to sort of not necessarily fix itself to the point where we're talking about American being like Delta and United in terms of margin production and so forth. But the balance sheet progress is going to continue with American and so forth. And boom, they unlock this very lucrative, we think, deal with Citi at the end of the year. And we'll get into more about premium and loyalty and what's really been driving the story here. And that's an incredibly important part of American story, right? Getting to $10 billion by the end of the decade and disclosing that will generate a 15% margin, right? That was we thought, important disclosure and something that came out this year, which was, we were expecting it, but we weren't expecting that level of remuneration or that level of margin being disclosed. So that fits into our theme on loyalty. You've got Elliott, of course, which I think is much more of a Jamie story than a me story on the equity side versus the credit side, because I'm not too worried about Southwest with negative net debt. I'm just more interested in, the big surprise there. And Jamie and I wrote about this. This was our lead takeaway from it. We didn't expect that Southwest's reaction to Elliott was to steal a page from Frontier's playbook and decide to become an aircraft trading company and really look to flip aircraft and book gains as a way to sort of appease the activist. That was consistent.
That was a surprise.
We knew Frontier would continue down that path and that the lessors would be willing accomplices in that ARB, if you would. But Southwest sort of embracing that was a little bit of a surprise, I thought, too. So you sort of line all that up, and then I'd say, on the aircraft side and the aircraft leasing side and so forth, we didn't go into the year factoring a door blowing off of Max, right, on an Alaska
it was a plug.
Aircraft. Plug. It wasn't a door, it was a plug. We didn't factor in how potentially crippling the Boeing strike would be, and the fact that they would need to issue, 20, probably enter the years thinking, okay, well, maybe Boeing, maybe they have to issue equity and they'll raise $5 or $10 billion of equity or something. We never sort of thought Boeing would get to a situation where they'd need to raise north of $25 billion of capital like they did, right? And so that was a surprise, but it wasn't a surprise that they were able to stay investment grade and right the ship and so forth from that perspective, and get to a point now where this week we're talking about the production lines being sort of turned back on more aggressively across the board for Boeing, both in Seattle and Charleston, right? So, we'll see what the outlook holds for 2025. But, you look back on the year and it's never, that's the great thing about this job, right? And what we all do from your perspective and from Jamie and my perspective, and hopefully everyone listening, right? You never know exactly what's going to happen. You take the news as it comes. You try to predict it as best you can. You try to capitalize on it. That's what we get paid for, Jamie and me, and you both as well, and probably most people listening, right? So, and you have to adjust. And you have to adjust all the inputs. And, we can't look at a crystal ball and say exactly what we think's going to happen in 2025. But we just did a webinar for an hour and a half, Jamie and I, and we have a 350-page deck. If people are clients and they want it, they can reach out to us, and where we give it our best shot. Let's put it that way.
So on the leasing side, obviously one of the big things for lessors over the last couple of years has been, the supply chain challenges with the OEMs and being able to, put more new assets on the books. How are lessors kind of handling that through the course? Because obviously it's not necessarily getting any better. With the Boeing strike, it got worse. Like what are you seeing in terms of any changes in their strategies to make sure that they continue to ultimately add new assets to the books? Because it's one of those, the leasing model works as long as you're continuing to add depreciating assets, right? When you stop doing that on a regular basis, you got to start doing other things. So just curious on your thoughts on that.
Well, and so listen, on the leasing front, right, we know lease rates continue to rise, values are rising and so forth. And it's just a question of remarking the book and getting rid of, AirCap had such a great slide at their investor day earlier this year. We reprinted it in our outlook that we released last week, right? Which is, here are our pre-COVID sort of okay deals, whatever, but here's our bad COVID deals and our recovering market deals and so forth, and just how all those roll off. And that's incredibly important disclosure that we're trying to get other lessors to disclose, right? But AirCap being the leader that they are, and given how big they are, they felt that we can at least sort of bucket the portfolio into these silos and sort of show people how, we think our net yield is going to improve over time as these planes are and these leases are marked to market and so forth. But on the big list of surprises for 2024, who would have thought that the Fed would cut 50 and 25 and 25 and so forth, and we'd be sitting here with a 10-year, where it is right now, right? We started the year literally a year ago at the December meeting, 1 year ago yesterday, right, where the Fed did this massive pivot, right? And interest rates fell off, not off a cliff, but, became very conducive to a bull market. And here we are a year later, and the Fed has turned, instead of turning, exceeding expectations to the dovish side, they're exceeding expectations to the hawkish side. And the market is adjusting for higher, for longer, and so forth, and what that means. And from a lessor's perspective, just look at the performance yesterday of AirCap stock, Air Lease stock, et cetera, in the public equities, right? And, that's something that we're much more focused on interest rates and the financing environment than we are worrying about the fundamental demand for aircraft leases that are rolling over in this market.
Are any leases really rolling over in this market?
Well,
I mean, the continued extensions and the transparency, or the lack of transparency that comes. I mean, this is what Garrick and I were talking about. Just the volumes of trades on the secondhand market is so limited, largely because of the extensions.
Yeah, and that's one thing that somebody made the comment to me about. With all these extensions that are coming online and that have been put in place over the next couple of years, there's probably going to be very few transitions because there's so many extensions that have been put in place, right? And so what does that do for the market? What does that do for lessors? If I know from the appraisal side, right, it's going to make it a fun couple of years when there's no transitions or little transitions going on to be able to kind of figure out, oh, so what's the market doing? Like, that's going to be interesting to watch, right? Because I mean, we've came from, a period where, there was a little trading. Now we're going back into a period where there's going to be fewer transitions. And so what does that mean for the market?
Well, and I want to throw one more thing out there too, because I just had to look it up. I want to make sure I got his name right, but I know Chris, so I should have known this. But Chris Beers, Chief Legal Officer at Aircastle. Maybe Chris is listening, but he's probably on the beach somewhere. And this is the story, right? March 2020, ISTAT Americas, right? Chris got on that stage, like inning number one of the COVID sort of shutdown, and basically said, no one should be expecting any recoveries anytime soon from Russia on these airplanes. I'll be on the beach retired before we see any material recoveries. And God bless Chris. I believe he's officially retired or about to retire at year end. He's on the beach and so forth. And we have AirCap now, specifically, because I know their number. I don't know Aircastle's number, but I know AirCap has effectively already recovered half of what they wrote down from Russia. And that was a big surprise. And by the way, I'm not trying to point out, Chris, that he was wrong, right? No one thought, and I give Chris a lot of credit for standing up there during, again, very early innings of the crisis and basically saying, this is going to be a long, drawn-out process. Obviously, this has big implications for the industry and so forth. But who would have thought that within 4 or 5 years, basically, we would see Russian settlements? I should, who'd have thought? I'm like, we always thought kind of Russia would need to do something, right? So that, there would be some sort of remuneration or something would happen. But it's certainly exceeded our expectations. And we were probably in the bullish camp about potential Russia recovery. So I just want to throw that out there. If we're looking back on, surprises from this year, there were some pleasant surprises
You're talking
in that regard.
You're talking the Russia sanctions, right? So that would have been 22, March of 22.
Yeah. Well, I'm talking about the Russia sanctions. So it was March of 20 COVID. Yeah, exactly.
Sure,
there wasn't COVID inning one. It was Russia sanctions inning one. Sorry, I'm confusing my crises.
Yeah, all the crises kind of mixed together. Yeah.
But it was ISTAT.
It wasn't
ISTAT San Diego.
All right, it's end of the year. I'm losing it. It was Russia. Let's not. As I like to joke, right? We've had 300-year floods. Let's not combine them, right? For aviation in the last 25 years between the GFC and then COVID and then Russia. Russia was separate from COVID. So forget what I just said. Let's edit the tape. But no, you know what I mean, right? And I give Chris a lot of credit for doing that.
Right. Yeah, no, it's true. I mean, if you think about the level of recovery that they've had in a period of less than 3 years, right? You're right. I mean, when as soon as that happened, everybody went, oh, it's going to take years and years to recover anything, right? And yet here we are. So it'll be...
But there was precedent for our conservatism. We weren't just punching out and saying, "Oh, this is going to take a long time." I mean, if we looked at how, even the Iraqi invasion of Kuwait and some of the claims and the time that took, which was a much clearer act of war, event. I mean, there was precedent for our conservatism. I mean, Mark's absolutely right that the speed and magnitude of settlements came as a surprise, but I can still hold my head high. I don't look back and think, oh, that was such a bad prediction that it was going to take, a lifetime or something like that.
Yeah, considering the recent news coming out of New York and insurance companies and deny, depose, whatever, that insurance companies actually paid out quicker than expected is in this industry is not exactly what you would expect in 24.
Yeah.
Okay, so sale leasebacks and Southwest. This is how I segue, because you mentioned something, I think Jamie, that was interesting on, maybe it was Mark. I can't remember. It's all fuzzy.
Yeah, it's the end of the year. We can blame that on the end of the year.
Exactly.
But Southwest moving into the sale leaseback space, kind of in response to Elliott. I mean, we're seeing a lot of that. Obviously, in North America, and we'll call it the growth startup phase, right? with Breeze, with Porter, a lot of that, but also with Frontier is kind of the one we think of. Why? Mm-hmm. Why was this a surprise? I see this as kind of a way to leverage that balance sheet a little bit, like Elliott would probably like. Not that it was necessarily expected. There are a lot of things they could do, but what is so different about this?
Look, it's not that it's so different. It's really some of the accounting treatment around this. I mean, and we wrote about this in an Air Canada note earlier this week. You know, I've gotten feedback that certain investors and maybe certain management teams view me as like the anti-sale leaseback guy, and by extension, they probably tarnish Mark with that same brush. And I don't think that's accurate at all. Sale leasebacks have long been part of the fabric of how CapEx and fleet expansion is managed. What we take umbrage with is deliberately selling aircraft at exaggerated premiums and then booking those premiums as an offset to one cost structure to give the illusion of higher operating margins at the airline level. Right? And there were some cases outside of the U.S. where airlines have actually booked sale leaseback premiums as revenue, which is like absolutely doesn't make sense to me. But just engaging, as Southwest sells aircraft and engages in sale leasebacks with its new deliveries, we don't find any fault with that. We're just not going to count that as speaking to the margin capability of the core franchise, because that's just a financing decision. That doesn't influence the RAS or shouldn't influence the RAS world that most of my equity investors uniquely focus on.
The question that I have, and we all have, really is, Jamie, why do you hate SLBs so much? I read that. Listen, I read that in your note, and I was like, who thinks that? Like, why? I never thought of that.
The world.
Yeah. Yeah, wait. Why fault?
Well, at least I don't get, I also got a lot of pushback at one point, and he's like, "Oh, Baker hates discounters," and well, I mean, look around,
Yeah, true.
Right. Anyway.
I mean, why you can't fault people for taking advantage of a market and raising capital, right? Through different structures.
In fairness, and to what Jamie was talking to, and I think it's really important, this distinction. And correct me if I'm wrong, Jamie, not to put words in your mouth, but what Jamie was saying is it's not the sale leaseback. It's how it's accounted for. If it's top line, right? So I see it. Revenue is silly, right? Booking it as revenue, that seems silly to me. I think Frontier was kind of booking it as a negative expense, operating expense. I didn't see how Southwest was. The reason why that's so important is because a lot of people look at, say, operating margin, just to oversimplify it here, as an indication of how the airline is operating. Sale leasebacks wouldn't be part of the operation, and so it clouds from an accounting side and from a metric side. It clouds how the airline is actually performing. You have to work those numbers back out.
Correct. Now, at least in Southwest's defense, so they have a prevailing operating margin guide for 2025 of between 3% and 5%. The 3 envisions little to no sale leaseback activity. The 5 reflects whatever their internal plan is. So they're doing the same thing. They're going to treat it as an offset to their cost structure, but at least they're putting better disclosures around it, because to me, the 3% is much more meaningful, because that's what helps me model the future, margin evolution at Southwest, which, by the way, we think Southwest can and will do better, but we do not see a path back to the margin perch that Southwest once dominated and looked down upon the rest of the industry from, which is why we don't have a buy in the stock. I mean, it is the single most expensive airline equity in North America. And, that doesn't interest us here. I'd have to see a path to, all else equal. If I thought there was a more rapid path to, $3 or more in earnings, then I think you might be able to justify a buy rating, at current levels. But we're well short of that.
And look who's doing the sale leasebacks with Frontier, for example, the two most recent deals, right? BOC Aviation and Avalon, two of the best lessors out there. Look at what AerCap did with Spirit, right? Which wasn't necessarily a traditional sale leaseback like the Avalon and BOC deal was. AerCap was sort of coming in as sort of rescue financing for Spirit. But certainly there's a willingness of the largest and best global lessors, right, to engage in this type of transactions, right? So who are we, Jamie and I, to say that there's something inherently flawed here? We're really looking at it because I think from the lessor side, ultimately, you're taking a credit bet, you're taking a aircraft bet, a metal bet in each of these situations, right? And these folks are smart; they know what they're doing with their capital and so forth. It may be a function of what the investment opportunities are, given a very limited sort of new order pipeline and delivery stream coming and so forth, and they have capital that they have to put to work. So it sort of gravitates towards situations like this. Our issue, again, just to hammer the point home, has been what the accounting shenanigans can do to mask the underlying core profitability. We've said it very clearly. Frontier is a money-losing airline that operates a very profitable aircraft trading company. Okay.
Yep. So I'm going to put you on the list of anti-SLB as well, Mark. At all
listen,
costs.
I will say the same thing, by the way, about, and this is what's so fascinating. I don't know if you want to go there or not. Maybe we can get there later. But, looking at the Spirit restructuring plan versus and comparing it to sort of their aspirations to Delta. Let's keep in mind, Courtney, and you did some great work on this, Courtney. See, I like to come on your podcast and tell everyone how smart you are. But Courtney,
that's why you're back. Let's be honest.
So, did anyone tell you that Courtney did the best work on the aircraft shortage? And okay, but never mind. That's old news, right? So, but you did some great work looking at Delta, right, and really breaking down their earnings. I think it was last quarter or year to date, right, and sort of showing that they're kind of a money, treading water, if you will. I don't know if you've said money losing in terms of your analysis of really their domestic operations, right? But if you look at where they're making money, it's loyalty, right? It's, premium and international, which is embedded in these other things, right? And that's the big problem that Jamie and I have with looking at the Spirit restructuring plan. That's a domestic, predominantly leisure-focused airline that is putting projections forth that they're going to be more profitable than Delta from a margin perspective, and that's comparing themselves, like inherently what they are the least profitable part of Delta, which is their domestic U.S. operations, where Delta is making all of their money is in everything that Spirit doesn't have. So how do you get to a point where you can say Spirit is going to be as profitable or more profitable than Delta when you don't have tools?
And to further that point, how do you get there without using Chapter 11 to radically transform your cost structure, which they're not doing, and understandably so. But when Mark and I have been enthused about Chapter 11 reorganization plans in the past, it's been because there's a path to structurally lower costs, through, gutting a, or offloading a pension, burden, or achieving, improved lease rates. You think about, how Aeromexico and LATAM, both went early and went hard and have meaningful, decades of ownership advantage relative to their closest competitors in the region. None of that really applies in the case of Spirit, which again is why we really do struggle. And we try to give everybody a fair shake. I want to understand how they think they can become more profitable than Delta, and I just can't. I can't get there in my earnings model with a straight face. That's my straight face.
Thank you.
Nice.
It's so Spirit. There's a couple topics we're dancing around there. The first one I don't want to jump past because it's loyalty, because I was dubbed the anti-loyalty guy for some stupid reason, because I pointed out that Delta kind of makes its profit on loyalty, and Jamie, you were very right to send me an email and be like, hey, this is very different than the sale leaseback, and I wholly agree. Right, this is intrinsic value to the company, to the business, right? So we have this. I mean, I guess this trend started earlier, and it's a global trend, but even it's just kind of more so in the U.S., where airlines are moving people as an excuse to make money doing something else. It used to be ancillary fees on the low cost side. Now more and more it's loyalty. That's not a problem. That's a very different business model. It's a profitable one, might I add. Sale leasebacks are kind of that other one. The problem with the sale leaseback to be profitable, as you were talking about, is that it's self-defeating at some point. Like you're burning the candle at both ends.
Yeah. At some point, the music stops or decrescendos, whereas we do view loyalty as a persistent business model.
Is it any different than what happens in the engine side of the industry we're talking about right now, where you give the engine away, if you will, but you're making all the money on everything that comes thereafter, if you will? And maybe that's not maybe more the right corollary is sort of thinking about, like, the classic example of the razor business, Gillette, you give you're basically giving the handle away for free and so forth, but you want to sell cartridges and so forth. It's kind of like, that's the way we think about the airline business right now, right? Which is you're kind of, you're running the business of moving people in the seats and so forth, but it's the loyalty and everything around that, right? That is where the value add is. And that's why what's so fascinating, right? And what, in a way, one of the sad things about United stock price, no one at United is going to think this is sad, going from $30 to $100 or wherever it is today, Jamie. I'm sure it's lower after yesterday, right? But with United stock price basically having tripled in the last, 6 months, 9 months maybe, I think they're going to be less incentivized in 2025, and we're probably not going to see something really creative with loyalty, which, if the industries, speaking of United and Delta specifically, if they had gotten so desperate, we would have seen them try to pursue something, and they still may down the road. Just there's not a level of urgency and desperation to it, because we know, in talking to these C-suites, and they talked about it very publicly. I mean, Mike Leskinen was very vocal about this, right? Talking about how can we have something so profitable like loyalty, embedded in an airline that back when United first put out, a $10 a share target this year, and the stock was at $30. It's like we're trading at 3 or 4 times earnings here, and we have this golden goose of loyalty here that we know these cash flows are so durable and would be valued, maybe not at the S&P 500's multiple of 20-something times, but it's got to be something bigger than 3 times. There's too much of a gap between 2 times, 3 times, and 22 times. Like somewhere in between probably is the right multiple on loyalty, which is the driving force of these big network airlines, and yet was just being completely ignored. And there were lots of efforts involving financial engineering around that I think are going to be pushed a little bit to the side, right, given this renaissance that we're going through here at United, at Delta, and so forth. But it's something to keep in mind for when what next hits the fan and so forth, and these management teams are banging their head against the wall as to why are airline stocks acting like airline stocks.
But the important thing to keep in mind is that loyalty can still drive pricing power, ticket pricing power. I mean, from where I sit, I view loyalty. I think, the quiet part, which I'm happy to say out loud, is that loyalty is really about trying to convince consumers not to comparison shop. So I'll just give you an example. I was in Miami recently flying back to New York. American should have been my first choice. Okay. And I did figure it out. I probably could have gotten home about 75 minutes earlier. Nice winter evening, sit by the fire. I could have used that time, but I chose to fly United because I was close to a PQP threshold where I'd collect another tranche of upgrade points, plus points to use in their program. I didn't even comparison shop. American might have cost more, might have cost less. I don't know. I was traveling for work. I wanted to fly United. I didn't even consider anybody else. That's such a win for United. Now, hopefully they priced my ticket accordingly, right? But if not for loyalty, I would not have chosen. I would have gotten home. I would have just, sucked it up, flown American, gotten home early. I mean, isn't that really the change in consumer behavior that Mileage Plus in this example is trying to accomplish?
Frankly, right? Yes,
okay.
Clearly, right? But I think the word loyalty is now not sufficient to describe what these programs are. I think currency is probably closer, or we're migrating between that traditional loyalty, which clearly, I mean, there are absolute loyalty benefits, to the idea of currency. And this is where the credit card programs and the idea comes in. When we think of points for credit cards, it's freaking flyer immediately, right? It's can I take a trip?
Yeah.
And these programs are taking more of a step towards the level of a currency as opposed to just loyalty. The reason why I say that is because, Mark, this happened in 24, feels like forever ago, but when we sat in New York and you asked, I've referenced this multiple times, you asked the room how many people had Amex Delta card, and 80% of the room raised their hand. You kind of worked your way down, and down is the appropriate term here, and to Spirit, and they're like, I don't know, maybe somebody raised their hand. I can't even remember if somebody raised their hand who had the Spirit loyalty card, or even we think of that as, well, who would be loyal to Spirit? But I think there's more to that. I think there's a currency. What can I spend it on? Right? If Sky Miles is a very liquid currency, mileage, advantage, these are very liquid currencies that I can spend on going anywhere, where if I'm Spirit, I have only so many. The interesting one in this, though, is Allegiant, which actually has done better than expectations, in that I think it's seen as a currency for some of these small markets where they're like, well, they're the only ones that fly here anyway.
Well, I mean, and that's, listen, Allegiant, the number one question we get about Spirit and discounters, right? And we've talked about this, I think, before offline, maybe not on a podcast, right? Is, why does Ryanair work in Europe and why does Spirit not work in the U.S.? And Courtney, I think you've actually done some work on this too, right? Which is to look at, where that flying is to competitive hubs and so forth, right? That's a whole nother topic, right? But the one thing I will say, just to your point on currency, right, is it's not just currency, it's the ecosystem, because it all ties in with paid load factor up front, the lounge experience. I was just at the Delta lounge opening in Boston, obviously jammed. I was at a Sky Club yesterday at LaGuardia, and I was just thinking to myself, as there was a queue outside and so forth, and thank God I skipped the queue and went in. Jamie would have been proud of me. But the...
Do you know who I am?
No. There was a separate line for diamond medallions, and normally everyone's in it, but there was no one in it, so I just skipped the line. But
I just keep a blue apron with me, and I put it on and start collecting glasses.
But my
I
point
always
is,
get it.
right, as I went into that Sky Club at LaGuardia, and it was jammed, and you could barely find a seat and so forth. I mean, think about, for all of us that are around our age, 40s, 50s, whatever, right? Think about what the airport club experience was like 15 years ago. I mean, you'd walk into the club, there'd be 5 people, right? And the clubs were so much, and think about how that's grown and so forth. And really, listen, this isn't a commercial for Delta, but Ed Bastian was just on CNBC giving his big, he's going to be the keynote speaker at the Consumer Electronics Show in Las Vegas, right? And Delta, they really are trying to position themselves like Apple. You can go out and buy a Chromebook for $150, or you can go out like probably most of us have on here. I'm talking to you on an iPad, but we all have our MacBooks or whatever it is, right? And pay, 3 or 4 times as much. And we're not going to be paying 3 or 4 times as much for travel, but given what historically have been razor thin margins, right? If you're paying 10 or 15% more for travel to be part of that Delta ecosystem, when it's loyalty, currency, whatever, and when we factor in paid load factor, that's what's so dramatically changed. Now, maybe the pendulum's going to swing back, right? At some point in time towards the discounters, to the extent that we're in a recession and so forth. But right now, right, especially in this post-COVID world where people, are paying for, people have been proven to want to pay up for a better product and better experience. And that right now, the Deltas of the world, the Uniteds of the world, American to some extent, they're offering a better experience within that ecosystem. And that's why Spirit and Frontier and Southwest and so forth are now playing copycat, right? And trying to pivot into those lanes, right? And that's what's going to be fascinating to watch in 2025 is, can they do it?
No.
Yeah, no, it's true. Right? I mean, to me, I look at all this stuff and it's very much, why Starbucks did so well when they first started, right? Because it made you feel like you were like, oh, I'm getting a treat. I'm feeling special. Yeah, I'm spending $6 for a latte. Yep. But you know what? I earned that. Like, it's good. I see the loyalty program is the same thing, right? Because it's kind of like you want to feel special and you're like, oh, I don't want to be out here in the terminal with everybody else. Let me go into the club where I can get, my free food and drinks, even though half of the terminal now is in the club, right?
But that's the problem.
That's the problem, right? And I think that's we've seen it with Starbucks now, where the consumer, I think, experience has been deteriorated, and I think they're trying to fix that. But I could see that happening on the airline side as well, where when everybody's it's like I'll take a quote from the Incredibles, the movie, right? When all of a sudden, when everybody's special, nobody's special, right?
Wow.
Like,
hey, and Garrett,
it's
why is there now?
And I think John Rainey, when he was still at United, said that, and
that is why has Delta now had to create a Delta One lounge system at JFK, at LAX, and so forth, because Garrett, they recognize exactly what you're talking about, which is, if everyone's in the club, what is the benefit of being in the club, right? So now you have to create the ultra exclusive club, right? That you can really sell to.
Yeah.
Well, and if you just think about Lopez, this is what American got wrong, because American at one point had the more room throughout coach, but it was giving more room to everybody. So when everybody had more pitch, nobody was willing to pay for it. That's what was structurally. I mean, I give credit, and this is back in the 90s. I think, trying to think outside of the box in that regard. But that was the problem that they made. They tried to make premium egalitarian and give it to everybody. That doesn't work.
Yeah, and that's
you have to have that.
I mean, this again, in Delta's challenge with the overcrowded lounges. Again, I see that in the context of the currency. That's inflation, right? They literally printed too many points, gave it to too many people. They all showed up, and now the value of that is less. I mean, now that inflation is a key word. But one of the so a personal change that I'm making, I'm kind of embarrassed to say, but I don't know. I've only been given bad feedback for this. I just switched my loyalty from Southwest to American, and I'm struggling with it. I'm really struggling. I'm in Dallas, so it's not like I'm going to go United. But I'm really struggling with this because A-List, Southwest, but truly what has made the shift for me actually is Southwest move into premium. I can show up whenever. I could buy a ticket the day before, show up, and know that I'm going to find myself with a seat. If they go to assigned seats, those seats will most often be taken. It's actually a challenge that I have with any of the airlines. But these shifts and changes, and look, if I'm collecting points when I go to Dublin, when I go to Tokyo, when I go to Dubai, I might as well have it all in one currency. And
Right.
not a huge fan of the American program, but I'm in Dallas. So what do you do, right? I mean, it's not, this really kind of gets to your point, Jamie, of, right, like, loyalty, currency, whatever we want to call it. At some point, it's stickiness.
Now, in fairness, in the example you give, I'm sure there is a commensurate Dallas local who only aspires to go to Florida and Hawaii that's thrilled with the changes that Southwest is making and doesn't see the need to shift. But I'm not going to give you grief for making that shift. I do think that that's also an inherent goal of loyalty programs. Make it really hard to switch teams.
You're right.
And Mark will remember, when United shifted its corporate domestic contract from United to Delta, people went nuts. I mean, just the vitriol. I mean, they were so angry about that. And, Delta really had to extend a lot of, benefits to help, assuage people, especially folks in our Chicago office that had amassed, huge balances in United, now being told they had to fly Delta to New York. I mean, it was like an internal mutiny now. And over time, it worked. But yeah, switching teams is, I can't imagine how. I mean, I think it's common knowledge that Mark and I, we were victims of Vasu and we stopped flying American as a result of that. JP Morgan was a corporate victim of the Vasu strategy. But that's different. That's different than what you described, which is sitting down doing an actual calculus. Should I port all my travel from
and
X
it
to Y?
hurts because it's not in protest at all. I love flying Southwest, right? And by the way, one of the big factors in the change was the parking garage rates at Dallas Love Airport are incredibly high now, right? So that not anything Southwest can figure. But one of the other challenges I had, and this kind of gets to Southwest and back towards Elliott, I've had a lot of people disagree with me when I say that I truly believe that the Southwest culture is an unquantifiable value for the airline. A lot of people have disagreed with me, and just from a personal side, and in the context of this switch, now granted I'm in the headquarters, every single Southwest Airlines employee is just that much better. They feel enabled to make the decisions that they make. You get the grumpy ones, but the gate agents, the flight attendants, the pilots, ground handlers, there is a difference.
So this is curious to me. So Courtney, when you get that pushback from others, is it on the basis that Southwest has just become so large that labor and culture aren't what they used to be, or is there some other tangible aspect that people gravitate toward? Because I agree with you, but I'll admit I've long struggled with this dynamic because there's not a commensurate cell in my spreadsheet that I can put something into.
And I don't know what that number is either, right? Because mash in their free bags. What's that? Right. I mean, so there are a whole bunch of qualitative factors. The pushback that I've been gotten largely centers around kind of the top down culture. Management is not what it was, but it also, quite frankly, the pushback I get on this almost seems a little jaded, like angry, frustrated. Okay. Either they were a part of the airline at one point or they're frustrated with the management. And I think it completely misses the passenger side, which, and Southwest, you just talk about how long it takes to build that culture from the bottom up. That culture and those people deliver a superior experience by and large. And there's value to that, to the company for sure.
Look, there's quite a bit of what Elliott has been trying to do that Mark and I do agree with. And if you think back to their initial deck, I mean, a lot of what we had written and criticisms that we have leveled against Southwest were appeared throughout that deck. But to your point, from the very start, I thought that jettisoning Bob Jordan would be a huge mistake for these very reasons. Because you bring in, and people, everyone wanted to talk to me about, is Jude interested? Could you ever get Scott Kirby to go to, if you install an outsider with no experience on day one, that 99% of the front line has no idea who that person is, that would be so destructive and disruptive
to
the franchise.
What's Frank?
I agree with a lot of Elliott's efforts, but the board constitution, reconstitution, I'm fine with. But leave senior
What's
management.
Frank Lorenzo doing these
for
days?
now.
I don't know why. I just thought of that.
He just wrote a book.
Yeah, he did. That's right.
Yeah.
All right. Well, we're getting close to the hour here, but I did want to just kind of get your thoughts on 2025. What are your thoughts in terms of, are we in for more of the same? Any changes that may come up, or what do you guys think in terms of?
I'll go first. Yes, more of the same. What interests me about the current industry setup, the exogenous risks are still there. I think the economy, the consumer, fuel prices, as always, those inputs could disrupt my earnings models. What's interesting to me is that really for the first time, I'm pretty sure this is the first time I've said it, close to 23 years at JP Morgan, I don't think managements themselves can screw up the narrative in the short term.
Don't pull a Doug Parker.
You heard it here first, folks.
In Doug's defense, he had that deck, or he had a page in a deck. This was years ago. When we start doing this, call us out, because this is really, really bad behavior. And look, where there's a will, there's a way. My point is, I don't think oversupply is going to disrupt my earnings forecasts. I don't think the next round of labor cost negotiation is going to disrupt it, because that's in the rearview mirror. 2 years ago, we were all over that. So I could let me paraphrase and say, when I identify idiosyncratic industry risks, I think it's at or near an all-time low. The macro, still as big a risk as it ever was. But overall, to me, that really improves, my perception of risk.
I want to follow up with that with one quick question. If your prediction is that managements can't screw it up next year, which management says, hold my beer, watch this? Which is most likely to?
Well,
that's
probably
exactly what I was
Southwest,
thinking, yeah.
because they've got more. They have their careers riding on this. I mean, the reason I paused is because American is the franchise that I would like to see do more. I would like to see American really come up with a solution for New York. And, give them credit. They tried with the Northeast Alliance. The courts prevented that. They need to find a solution for Chicago. Los Angeles is never going to be profitable for them. But I don't think management has the appetite to really undertake what needs to happen there. So my answer is Southwest, although I wish it was American.
I would say, I would say on my side, first I'm going to try not to confuse COVID and Russia in 2025 like I did 30 minutes ago. But seriously, we've had a theme, right? Last couple of years, we've talked about aircrafting over airlining, and that risk-adjusted return opportunities were better, and sort of all things related to the lessors and, one step removed from Boeing and Airbus and play that whole part of it, right? And I think that cut across industries as well. If you looked at, even like the rebound in Rolls-Royce stock and so forth, right? But I'm just talking specifically on, air lease and aircraft stock and debt and double ETCs and everything tied to aircraft, right? That pendulum has shifted right now, because what's happened is everything on the aircraft side, again, outside of Boeing stock, say, or Airbus stock, has performed really well, right? And now we're seeing, a little bit of this airline renaissance. Exhibit A would be the skyrocketing United Airlines stock second half of the year, right? So that pendulum from aircraft into airlining has actually shifted back a little bit, maybe more towards the airlining side, and we'll be talking about that a little bit more in 2025. Obviously, the entire Spirit pre-court process and in-court process has been designed to get Frontier to re-engage. So we will be looking for whether or not Frontier, and really,
regardless of what they say, by the way,
regardless of what Frontier says, whether or not the folks that are actually controlling Frontier decide that they want to re-engage. Don't forget, it's in the document that they bid, right, for Spirit. As part of this, it was in the day one filings that they bid. But they clearly, the folks in charge of Spirit wanted to go through the process that they went through and so forth in hopes that there would be a better outcome, right? And, there were contingencies and all of that, right? So Spirit had to go through that process, right, to figure out how to deal with the loyalty brand bonds, the 8%, the converts, et cetera, rationalize that, have an entity that is more digestible now for Frontier. We'll see if that actually happens. If that doesn't happen, we may be talking in December next year about Spirit filing Chapter 22. But maybe not, because maybe the floor, because of industry capacity, has sort of risen, if you will, the downside floor for the discounters and so forth. And maybe that delays that process. We're going to be very focused on that in 2025. We're going to be focused on Americans' continued recovery from the Vasu experiment and whether or not they can close the margin gap, because American has the tools, right, that Delta and United have. They just haven't had the execution, right? And the tools may not be as sharp, the hammer may not be as big, but they're not missing anything. I mean, international isn't as big and so forth, right? But the margin gap performance between, there's no reason why Delta and United should be off in the stratosphere and American should be so far behind. That gap can close. So we're going to watch for that next year as well. That's really sort of, and last I say, because we've spent very little time here on JetBlue today, we barely mentioned it. We do think that Joanna, and especially given her, we think, very smart move to recruit everyone's friend, Marty St. George.
Yes.
And
his friend, Daniel Schurz, right? I mean, my goodness, Daniel. This is the rock star team now.
Well, and we think, we've been saying all along, because we made a big call on JetBlue debt, specifically, which is still very cheap, hanging out there at 8.5%, basically, in a market a high yield market that's sort of 6.5%. So it looks very, very cheap to me. And it's been controversial because some people hate it. We like it. We've been saying, in order for that bet to work, you just have to partially fix JetBlue. You don't even have to really fix it. You just have to partially fix it. And we think this management team has, again, enough real estate there to partially fix all the problems of the past sort of 24 months when they took their eye off the ball because of Spirit and so forth, and the industry shifted and JetBlue was caught flat-footed. We think they can catch up, maybe not all the way, but to some degree. So we're going to be watching that very closely in 2025.
Okay, very quickly, Garrick, your calls for 25.
My calls for 25? Look, from my perspective, right, which is more value trends, lease rate trends, right? I think there is flattening. I think it's, you're going to see a plateau, especially on narrow bodies. I think wide bodies, I think that it's still recovering, right? So you're definitely seeing that there. Yeah, I mean, that's kind of, that'd be my take on what I see there. I do think that the fact that there's been so many extensions, right? At what point does that create some issues for whether it's the lessors, whether it's for airlines, right? I mean, there's something that could be missing there. But yeah, I mean, that's that from the appraisal side. I think that's, you still have a year of recovery next year on the wide body side, because I think it's still very strong market, and I think the incoming wide bodies are not as attractive. It's especially if you look at the A330neo versus the A330ceos, that kind of stuff. So you see a continuation there, but definitely a flattening out, I think, on the, not to say that there's going to be a decline, but I think, the level's off.
Cool. Okay. My contrarian call for next year. I just thought of this. And this was not my idea, but I wholly agree with my colleague Brett Snyder actually on this. We've had a lot of conversations. I think 2025 includes a serious conversation about United opening a South Florida hub. I do not count Orlando as South Florida. And I think Spirit is a potential opportunity to do something like that. I'm not saying it happens. I'm not saying it's an acquisition. I'm saying Fort Lauderdale, what would United pay? What should they pay for a South Florida, Latin America, Fort Lauderdale presence? Woof. That's a big number. And I think that's going to be a conversation next year. I may be totally wrong on that. That's my contrarian call.
I wish you'd brought up this topic earlier, but, with luck, we'll do a third one of these. And why don't we start off with the paucity of Southeast exposure in United's domestic network.
And it has been. Hell, it was for Continental, too. Continental and United, but you're absolutely right.
Yeah.
Gentlemen, thank you very much.
Greensboro wasn't the solution.
That was next on my list. It was right there.
Some of us are old enough.
Yeah, guys, this has been fantastic as always. Thank you very much for taking the time. We always love chatting with you guys, so thank you very much. We definitely wish you very happy holidays, Merry Christmas, all that good stuff, and look forward to chatting with you guys in 25 and doing this again so that you could be the first to do it a third time. How about that? We'll definitely have you back on. So thank you very much.